Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in and take a look, see what's going on today. If you want to follow me, it's @_finance. And if you want to join our community, finding-value.com, where I dive deeper into all these areas looking for investment opportunities and sharing it with the community. And you can see the special coupon code there. Scrolling down, Art Berman, we think the worst case is far from priced in. Barclays analyst Ampreet Singh said, in the worst case scenario of a wider conflagration, we would expect prices to move past $100 a barrel. And that oil braces for even bigger risk premium as U.S. mulls Iran strikes. I was seeing earlier in the day, yesterday, that we were getting a good sized move in oil. And then they released some news about Trump delaying his decision by 2 weeks. Although I don't think you would, graph that out or telegraph that out. But the market did sell off oil wise very quickly after he tweeted that, almost like it was a code sign to sell. He does that a lot. Trump's been doing that. It's always 2 weeks, 2 weeks for everything. Oh, and Bissent does that too. Oh, we're going to get a whole bunch more people signing on to our tariff information. Oh, it'll just be 2 weeks, 2 weeks, 2 weeks, but yet nothing actually materializes. I don't know if that's something to do with the markets, that they're trying to telegraph something and then control it, or talk it up or talk something down, depending on what they're talking about. But I see that a lot, this 2 weeks thing. Sam Gatlin says, are industrial metals about to break above this multi-year downtrend line? It sure looks like it's trying to. That is the ASC Industrial Metals Index, equal weighted index of aluminum, copper, lead, nickel, tin, and zinc. And another thing that you can do if you get these indexes, you can start to look at each one of these. Aluminum's still underneath resistance. Copper has already broken out. Nickel is still down. It hasn't really gained any momentum yet. Tin and zinc, I don't really follow them as much, but they're right underneath, and it looks like this is ready to break at any second. Copper's already broken out, so I would suspect that the base metals would eventually break to the upside. And iron ore, I know it doesn't say equal weighted for iron ore there, but iron ore is doing something very similar. So what do you think the base metals are going to do? In my opinion, they're going to break higher. Commodities index is going up. Oil is trying to break higher. I think everything's going to break higher. Now, if everything is breaking higher, what does that say about the individual sector's fundamentals? Is that what's driving it all higher? Well, it can't be if they're all breaking to the upside. It means that what they are being priced in is breaking down, which is the dollar. Now, we could break higher on the DXY, which is an index. That's all relative. But the dollar could still go down, and it could go down dramatically in real terms. And when I mean by real terms, this is real terms. It's industrial metals index. That is real. It's not some fake index where they price four parachute jumpers relative to each other, all jumping out of an airplane, and then measuring the relative distance between the parachute jumpers. They're all going down. The parachute jumpers are, and we're not measuring the relative movements between the jumpers themselves. Here's Anas. He says, get this. OPEC V8 production ceiling increase for April, May, and June is 960,000 barrels a day. The actual export increase that's what matters. By June's end is about 60% of that production ceiling increase. And that's because internal demand during the summer goes up. in the Middle East. Crude exports from Venezuela, Brazil, and the US and Ecuador decline by about 400,000 barrels a day. The net supply increase by June's end is about 150,000 barrels per day maximum. Well, that's a heck of a lot less than what most people read in the headlines and say, oh, they're increasing all of this amount. Maybe it's 410,000 barrels this month and another 410. Yeah, but it's not that much in total aggregate supply, guys. It's not that much. Coming down, Stefano says XLE divided by GDX. That's the energy ETF divided by the gold mining ETF ratio is strongly correlated to the USD. The US dollar rally is just confirming what my blog subscribers already know. Overweight oil stocks. Which ones with which targets in which sectors, upstream, midstream, or downstream? Take a 3-day free trial to find out. Don't miss it. Don't miss out. And this is ready to break upward for the dollar. XLE divided by GDX ratio tracks the dollar movements quite well. Why is that the case? Because the dollar generally goes up when interest rates go up, and interest rates go up when oil goes up. Just recently, we've seen a gigantic disconnect between oil and interest rates. And that's what got me thinking, well, maybe they're back there trying to hold oil down to get interest rates down. But interest rates really didn't fall very much. And oil fell. And that's when Bissett and Trump were saying, look at oil, look at oil. It's falling. Inflation is going down. And Trump's like, I know what you're doing, guys. I see what you're doing. It's not going to work. Sorry. We've got a lot of inflation in the system that's coming. Oil's most likely going to go higher. And you guys are just temporarily talking it down a little bit. NASDAQ, interesting technicals developing here. And this is a uptrend. It breaks the uptrend line. And then we get to move higher into a rising wedge. Could that be a double top? It could be. Doesn't mean it is, but it could be. In all these charts that I do watch, you can see here, we've got the momentum heading lower there. That is the SMI is what that's called. So very well could go low. That is a possibility, and it is things that we should be looking at is the overall markets. If the overall markets were to puke very quickly, that could impact everything. Margin calls, people get scared, fear in the market increases again, and then we're back into a short-term little move to the downside. So that's definitely possible. Now, people try to time this stuff, and I just don't think it's possible. I mean, yeah, the chart suggests that, but I also look at a bunch of other things that look very good. So, like oil and all these other things. And oil, it's not like oil is flying higher during a slowdown or recession. Usually it goes up when the economy is decently strong, and it does go up even if there's a slowdown. It just doesn't go up as much. But this is something to watch. Watch. Gold, silver, HQ. Silver is the most shorted commodity. Platinum is second. And now it seems it's set free. Win silver. These are silver, platinum, gold, and palladium, all shorted, the precious metals, group metals. And platinum and silver are the two that I think could have ridiculous moves to the upside. And I wonder what happens if these go up dramatically. I mean dramatically. What the shorts in silver and platinum will do to the banking system. I don't know. I mean, maybe they'll have problems. North Star says, no narratives or conspiracy theories required. Gold, oil, sugar, silver, plus many, many more are all affected by the same capital flows and broadly speaking, follow the same path. If gold and silver are going up, oil will move past $100 and likely past $200 as well. And this is the correlation between all of the asset categories of sugar, oil, silver, and gold. They all consolidate in the same time frame, and they all go up together. Some move first, some are lagged behind, and some move after even the laggards. You have the lagger of the laggards. Um, Oil looks good. I think we're going higher. That's what I think. Silver. This chart is what contrarian investing is all about. Blue breakout is now confirmed as the chart now has a higher high above the pink line breakout. Also means the blue back test is finished. A true lifetime opportunity is made use of. The tide is turning, and this is silver versus the US stock index. And you can see here we are breaking the pink horizontal trend line to the upside. It's a 14-year bullish falling wedge. You can see that we consolidated a bunch at the bottom here between 2019, 2020, and 22, 23, 24. Now we're going to light it up. We're going to light it up. Precious metals outperforming the stock market big picture means global paradigm shift in the making, with capital flows changing towards precious metals. He's 100% right. Now I played this the entire way. I bought this bottom here, and I bought a little bit through here. The bulk of it was here because that's when silver was the cheapest and it was starting to turn higher. I'm also playing it with platinum. Now I don't have platinums. We can actually look at platinum. Let's look at that. I haven't really looked at that. We'll look at it real quick here. This will be platinum divided by the S&P 500 just to see what it's doing. I bet you it's turning higher for sure. Look at that. Look at that nice move we got. So we've got a near-term trend line. This is a falling wedge trend line break. There's that. And this is generally what the bottoms look like. I think this is probably a gigantic like double bottom going on here. And then we'll eventually work all the way back up and eventually maybe possible, get all the way towards the peak here. Maybe we even go higher than that because it was a lot higher in the early 80s, 1970s. I'm betting it. So 79 and 80. We have a long way to go for platinum versus the S&P 500. And we have just recently broken out of a falling wedge. And this one you can go all the way back with it if you'd like. But this looks absolutely excellent for platinum versus SPX. All right, Grady, gold miners are bottoming, very big picture versus gold. It means that the gold miners are about to outperform gold long term. Means the real bull in miners is about to start. That is an 11-year base. The bigger the base, the higher in space. Big gains so far, which are about to get bigger. I know a lot of people they're not very bullish on the gold silver mining companies. I am and I'm not. I agree with that, but this is a very compelling case here, and it's still very cheap. And when I look at this chart, it does make me want to buy a little bit more and up my percent allocation to it. What he has here is a 30-year bullish falling wedge, which is, I mean, that's a long wedge. And then you can see that we've broken out of the wedge. So the pink breakout will also mean a new high after the blue breakout. Blue breakout confirmation. So we're trying to break out of this other wedge. It's a 9-year bullish rising triangle. Ratio charts are about relative strength. They compare the performance of one stock relative to another, and they are a useful additional tool for figuring out sector direction. And that's a 34-year falling wedge of gold miners versus gold. And that could be an outperformance of 5x as gold goes up. So the miners would outperform gold by 5 times if it were to reach back towards the peak as gold goes higher. So if gold goes up, let's say we're at 3,500, and let's say it doubles, we would do a 10x on the gold and silver mining companies of XAU. And then within that, there could be ones that go up 20, 30, 40, 50 times. The Great Marty says gold, keep it simple. Ascending triangle forming, break above targets are 4K would be the projected price move if we break this ascending triangle here. Tavi says, much has been said about bearish sentiment on the US dollar being a crowded narrative. If that's the case, then why is the Canadian dollar sitting near one of its most heavily shorted levels in history? In my view, the Canadian dollar is well positioned to benefit from potential trade deals, especially given its strong ties to natural resources and the setup for a possible unwinding of these short positions. Keep in mind that the Canadian dollar has recently broken out from a 14-year resistance. And there's the breakdown. This is Canadian dollar positioning, which is very, very low. A lot of the times you want to buy when things are at their bottom or have broken down. Maybe this is a false breakdown, slingshot higher. But Canadian dollar, I'm bullish on it. And this is how I view charts, guys. On a ratio chart or something that is negative like this is more of like an index, so to speak. Whenever you get really, really low, like an anomaly low like this, I turn bullish. When you get to these peaks, I turn bearish up here. So bearish, bullish. And then this is probably the bullish era, and you can see it's 2000. So we went upward during this time frame. That's when commodities were high. This is more or less is when commodities are low. And this is like an anomaly. So I think if we get a gigantic move in the Canadian dollar, that reversal, the Canadian stock market's going to get a gigantic amount of money inflows. And that's why it's important to look at this. And that's what I've got for today, guys. That's where I'm going to end it. So that's all I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special with the coupon code. We've got a question and answer session coming up at Saturday, 7 a.m. Mountain Time. We'll see you guys there. And that's all I've got for today. So we'll catch you next time.